Hello, everyone. Welcome to today's webinar talking about the Trump accounts. A little under the weather today, bear with me, but we'll get through it. This is an important one. The timing right now with the plan just coming out means that now's the time to get this done and start putting this piece in place for your financial plan if you're eligible. So I wanted to make sure that we kept this relevant to the new accounts that just launched and help you with all the information that you need to know that if it's the right piece to add to your overall financial plan. That's why we're doing the webinar today, is that the Trump accounts launched on the 4th of July, that they became available to set up. It was part of the One Big Beautiful Bill Act last year, but once you announce something like that with this many moving pieces, it takes a little bit to actually get everything ready to launch. So July 1st was the launch date for that. And there's actually already 6 million kids signed up for the plan, with 1.4 million of claiming seed money already. And we'll talk about how you can qualify to get some of that seed money, which I'm sure you've seen on other articles or on the news, is $1,000. So you'll get $1,000 for your child just right into the account from the government. So we'll talk more about that in a second. So what is the Trump account? Let's start there. The Trump account is an account that is for kids, but it's different than what's out there right now in the sense that it's built to be a retirement plan and a long-term savings vehicle, where really the only options right now for a child are going to be accounts like a 529 plan, which is a college plan. Or there's other accounts that your kids just get the money when they turn 18 and there's no type of stipulations or anything like that. So there's not really a lot of things out there that's for retirement specific for your child. So this is one kind of new area that will be available where you can save for your kid. So anyone under 18 with a social security number is eligible to open a Trump account. And these are a little bit different than your other investment vehicles where you have different places you can go to open the account. You actually are going to be opening it through the government website, and the money in the account is going to be housed at Robinhood. So if you haven't heard of Robinhood, it's a very popular custodian for investment management, like a Charles Schwab or a Fidelity or maybe some of these other names that you're more familiar with. So you'll be able to open this account through the government portal, but your money will be housed and invested through Robinhood. So one thing I want to talk about is the tax implications of this account, because it's a little bit unique in the way that the taxes work here. So when you add money to a Trump account or the $1,000 that you get from the government, that is all going to be cost basis. So what that means is that money that you add to the account, you do not get any sort of tax deduction or benefit for adding that money to the plan, but that money never gets taxed again. So think of it a Roth account where that cost basis, the money that you put into the plan, it gets to grow tax free, and then you get to take out at least the money that you put in tax free. Now, the growth is tax deferred. So it's growing tax free, but then any of the growth that you get in the account is going to either count as income, like a traditional IRA, or you can do a Roth conversion for your child when they turn 18, or actually they can do it and move the money into a Roth IRA. And when they do that switch, they're going to pay income taxes on any of the gains that they got during that time while that money was invested. Then from there going forwards, now it works just like a Roth IRA where it's all going to be tax free. So it's almost like a hybrid of a pre-tax traditional IRA and a Roth IRA, because the basis that you put in is not getting taxed again, and that money can be accessed tax free. But the growth in the account, that money still needs to pay income taxes at some point down the road, whether it's when you do a Roth conversion when they're 18, or whether your child waits till retirement and takes that money out at a future date. So that's going to be a conversation to talk about with them. What I would imagine that most people would do in this scenario is they would actually do the conversion when their child's 18 or maybe even 19, 20, 21, right? If they're in college, as an example, they're going to have very low income. So it'd be a great opportunity to do that conversion and maybe even not have any income taxes because their income is so low during those years. Or you can kind of pace it out for a few years. So that's really the thought there, is that you would do the conversion early on while income taxes are going to be historically low for your child. Now, future withdrawals, once it's in the Roth IRA, it behaves just like any other Roth IRA. So you hold the money for 5 years and then you can take the money out as a qualified withdrawal if they're over the age of 60, or there's a couple stipulations where you can take money out for hardships and first time home purchases and things like that. Basically just becomes your regular Roth IRA at that point. Now, the $1,000 that I mentioned, right? This is free money, $1,000 right into the account for your child. Now, the $1,000, you can get this for your child if they were born between 2025, so January 1st, 2025, and December 31st, 2028. So if your child is born during this window, then you just automatically qualify for this $1,000 into your account. And so you can get that by, all you have to do is set up the account, and then you're going to have to do this special form, which is a 4547 form. And if you fill that form out, then the $1,000 will just be automatically deposited into your account and get invested for you. So my thought here is whether you want to add more money to this plan or not, that's a financial planning conversation. But everyone who has a child born between 2025 and 2028 should be setting up this account to claim this free $1,000, right? That's like a no-brainer. And then really from there is whether you want to add more money on top of that to this plan, or you can just let that $1,000 sit. It's going to get invested and grow. And that's just money that your child's going to get when they're 18. 18 years from now, that money could be $4,000 or $5,000 at that point. So you might as well capitalize on that. Some of the rules associated with this plan, there is an annual contribution limit. So the annual contribution limit is going to be $5,000 per year per child. And then it'll start increasing with inflation starting in 2027. So it'll slowly go up every year on what that max contribution is. But to start with, it's $5,000 per year. Now, it is going to be auto invested by default. So you actually do not get to choose the investment strategy for this money, which is a pro and a con, right? It's a pro because you don't have to worry about it and they are diversifying it for you. So it's not going to be in anything that's high risk. It's going to be all in long-term investments. The con is that maybe you don't want all your money in, say, the S&P 500, and you want to be able to choose your own investment strategy for this money. Right now, at least that's not an option. There are more funds that will become available in the future, but as of now, it's just basically this set investment strategy. I did want to compare. I know some people might be confused. Trump account or 529 plan. What should I set up for my child? To me, I would lean more toward the 529 plan to start with, because the 529 plan is going to be for college savings and you can take the money out and use it completely tax-free for their college. The nice part is, and this kind of trumps the Trump account, if you will, is the 529 plan. If you don't spend it for college, you can actually take $36,000 of it and move it to a Roth IRA. And when you do that, there's no taxes associated. So you either put money into a Trump account and then do the Roth conversion later and owe taxes on the gains, or you put the money into the 529 plan and convert it into a Roth IRA later on without any extra tax bill. So obviously that's going to be the better option to not cause any taxes for you. So that is something to think about there, is that you have really more flexibility. Really, I like the Trump account for our S Corp court reporters, but outside of that, I think more people are going to be still leaning toward the 529 plan and maybe just getting that free $1,000 if they can. So your action steps today, if you do have a child, a newborn, Definitely file that form 4547 and get that $1,000 of seed money. You can just Google Trump account sign up and make sure you go to a government website in order to set that up, but it'll be top of the list to get that done. If you are an S Corp, ask your CPA about setting up that Section 128 plan. It's just basically written documentation to have on file for your business that'll allow your business to add that money for the employee and get that benefit. And then other than that is make sure that you're layering your tools for your child. We never want to put all of our eggs in one basket. So don't put everything in the Trump account if you are going to set that up. Also consider the other options such as 529 plans, brokerage accounts, and make sure that there's other options available. If you do have any questions, feel free to reach out. You can email me, Brandon at traction-wealth.com, or you can go to my website, which is just traction-wealth.com, and you can set up a meeting as well where we can talk more about this and your specific financial situation. So that's all I have for today. If you have any questions, leave them in the comments. Otherwise, I'll see you all next time.